So for the practice problem for the CVP multi-product, we're just going to go to session 15 and then go to CVP multi-product template. So I'm going to pull up my cheat sheet so that you guys can use it. And it's kind of small, so you may have to zoom in and pause if you can. And this is the question we're going to be working on. So this question basically gives these three products of this company, and it starts off by asking you to prepare a contribution margin income statement for the three shirts, so each of these three products, and to make a total contribution margin income statement. So before you guys start this problem, let me just say that because it doesn't say anywhere that you can allocate the fixed costs based off of anything, then don't add fixed costs to the contribution margin income statements for these three products. Just stop their income statements at contribution margin, and then just do the whole contribution margin income statement for the total column. So why don't you guys try making those three individual contribution margin income statements and then the total contribution margin income statement. Okay, so to start, you want to always start with revenue. So that is just the price times quantity of each. So here we have those. And then the variable manufacturing costs, and then total. And the variable selling costs, which are a percent of revenue. And then that will give you your contribution margin income statement. And this is where you should have stopped for these three products. Next, you have your fixed costs, which add up to 80,000, which can then get you your operating profit of a total of $25,850. Now this next section you guys can do on your own time, but just to save time, I'm going to kind of skip through it. It's just asking for break-even revenue, margin of safety percent, and degree of operating leverage. So here are the answers for that. Okay, so now we get on to the part that deals with multi-product CVP. So for this first part, it says calculate the revenue required for BDS to earn a 15% pre-tax return on sales next year, assuming that the sales mix stays constant. So take a second to try that out. Okay, so as you might have noticed, it's asking for the revenue required. So we know we're going to be looking over here, and it says pre-tax, so we're going to be up on this pre-tax revenue required, and it gave us a return on sales ratio. So we know we're going to use this second equation. So fixed cost divided by contribution margin ratio minus return on sales ratio. So if we take our fixed cost of $80,000 divided by our CM ratio, so this divided by your revenue, and then subtract off your 15% return on sales, that should give you your $257,884 of revenue required to hit that return on sales. So now, why don't you try to figure out, if you're assuming the sales mix is constant, how many sweatshirts or how many units of sweatshirts would you have to sell as a company in order to hit that 15% return on sales? So why don't you try that out? Okay, so here's kind of the equation. So remember that it's asking us for the units of sweatshirts, and we know that the units just equals the required revenue, which is found above, and divided by price per unit. So also, you might have remembered and noted that because it's asking specifically for sweatshirts, which is just one of our products, that would be the second one here, that we have to kind of do this weird thing here. So we know that we needed to make $257,884 in revenue in order to hit that return on sales. And if we know that sweatshirts account for 75 thousand of the $230,000 in total revenue. And then we know that sweatshirts account for 75 divided by 230, around 32%. So if we need to make this much revenue, then we'll just have to multiply that times a 32% mix for sweatshirts. We know that the sweatshirts need to make around $84,000. And if each sweatshirt only costs $25, then we'll just need to take that $84,000 divided by that $25 per sweatshirt. Yeah. Oh shoot. To figure out that we need that 3,364. And I think I should note here that they rounded up, and this is specifically because even if this would said like 3,363.2, to hit that amount of money, you want to round up because you would rather sell a little extra over your benchmark and sell too much than to sell even a cent under your benchmark. So when it comes to problems like this, asking for a return on sales or a break even, always round up. And then finally with this question, you have this little thing, but this doesn't honestly relate to the question, so I'm just going to skip it for now. Yep, so that's how you do multi-product CVP. You just act as though this totals column is just one product, and then if it asks you specifically for one product's return on required revenue or break even, you just have to multiply what you found before times the sales mix. Okay.